Let this sink in for a moment. The lack of financial education cost Americans $450 billion in 2021. 78% of American homeowners are living paycheck to paycheck. And right now, most American homeowners are equity rich and cash poor. That's another word for broke. The media isn't helping you, schools aren't helping you, and the government for sure isn't going to save you. As a top 1% mortgage professional and seasoned investor, I cannot sit around and watch these life-changing skills that I've learned outside of traditional schooling be unused, untaught, and thrown in the trash can. So until these statistics change, I'll be here every single week, preaching and teaching personal and professional finance, information that you can use in your life, however that looks, whether you are 16 or 60. Hey friends, welcome back to another episode of the Happy Homeowner Podcast. I'm here with a really good friend of mine, a heck of a real estate agent. I think the only thing missing today is our buddy, Chad Cooley.
That's right. Should have had him on.
We should have had him on. I don't know if his message would be great for our audience, which, speaking of my audience, I started this podcast about 4 years ago, mainly for my clients, so they could kind of keep an idea of what the market was doing. They could stay in tune with the market when I bring in professionals like Jason and other top agents in the area. And then it kind of grew with social media. I'm still going back to the main reason why I created this. If you're listening to this, I guarantee you are a client of mine, you're becoming a client of mine, or you're on social media interested in the city that we're talking about today. So what I'll do is I'll bring in experts in certain areas. Today, we're going to focus on Kenmore, Washington. I think it's a hidden gem. I know Jason feels the same way. He sells a lot of homes in this area. He knows the area. He lives right around the area. And so I want to do a real quick introduction, though. So I got Jason Windom. I've known Jason for about 3 years now. We got introduced, and this means a lot. I got introduced to Jason through a really good real estate agent, a good friend of mine, very, very credible person. And he was like, hey, I think you should meet Jason. You guys are a lot alike. He sells a lot of real estate and does a heck of a job. And we met for coffee, and the rest is history. I think you've introduced me to a couple of really great people, Michelle Wilson and Chad Cooley, and I've had the opportunity to work with a lot of your clients over the past few years. So I'm excited to have you here. I'm also honored to have you here. So welcome.
Excited to be here, man. Thank you.
Yeah. Well, we're going to talk about Kenmore. And if you're new to watching any of these episodes, the outline is going to be very, very simple and very, very impactful. So we're going to talk a little about Jason's journey in real estate, a little about Kenmore. We're going to give you some market stats so you can better understand what's going on in Kenmore. Is it a good time to buy? Is it a buyer's market or seller's market? Then I'm going to come full circle from a mortgage finance standpoint based off of average sales and kind of give you an idea of what it would cost financially to live in Kenmore if you like this area. And then of course from there, I want you to reach out to Jason if you want more information on this area. And then we'll come full circle at the very end. And Jason's going to give you some insider tips on some of the bigger mistakes he's seeing right now with sellers and buyers. And then if you were thinking about buying in the next year and you had about 6 months, what to do to prep. So this is going to be a great episode today. I'm always curious with any guest, Jason, how'd you get into real estate?
Man, it's really funny because I commend the people that just want to go out there and get their real estate license. That was not how it was for me. I actually was going to be a financial advisor.
Okay.
I had a offer to become a financial advisor, but I was talking with all my friends. I wanted to really have a way for passive income. Mm-hmm. And I just spoke with a real estate agent friend of mine, and she was in a networking group at the time. And she said, hey, interesting, you're going to be a financial advisor. I want you to come talk with my partner. And they were looking for an investor specialist on their real estate team. And I sat down with this gal. Her name was Jennifer Beatles. And she was telling me, the financial advisors couldn't get the returns that she was getting with her rental properties. Everybody loves talking real estate and everybody wants to be, invest in real estate and that kind of thing. So, I just found it really fascinating. And so I said, okay, this sounds funner. This sounds like more exciting.
Yeah.
And so I said, you know what, I'll get my real estate license and I'll become this investor specialist on your team. And so that's what I did my whole first year. I just hunted for. It was a pretty cool setup because she had she partnered with investors. She had a ton of investors looking for deals.
Yep.
So pretty much all I did all day was just sit there and try to find deals, underwrite deals, present them to the investor clients, and they would buy them. Now, the criteria that I was taught over time, the deal started, this is in 2016. Mm-hmm. And this is kind of in the tail end of where you could actually buy a property to hold it. And, but we did everything, buying properties at auction still, even at that point, flips. And towards the end of it, as the deals started to dry up, we got into land development.
Okay.
And, but the deals kind of dried up, and I was about to get out of real estate. And then my second year, I just said, you know what, I'm just going to go all in as a normal real estate agent, residential. And I did that, and the rest was history.
Well, I'm glad you did that, because that's how I met you, is because you're a heck of an agent. So how cool is it that you've got a background in the investor side of real estate versus just wanting to get in, because a lot of people just get into real estate because it's, some freedom, bigger commission checks, stuff like that.
Yeah.
I love that you got in with some direction and some intentionality around, I want to work with investors. I want to teach people how to become an investor in real estate. I came from a very, very similar path. I was a college baseball coach. But I had flipped a couple of homes while I was at college. One of my athletes' dads was in real estate and finance, and he got me turned on to investing at an earlier age. And when it came a point in time in my career where baseball had me all over the country, and my wife and I got married and had kids, and I needed to make a career change, I knew I didn't want to be I didn't want to be a real estate agent. That wasn't something that was really super attractive for me at the time. But I wanted to, same thing with you, I wanted the investment side of it. I wanted to, learn more for myself, but then teach people as a coach. Like, I was a college baseball coach. I'm teaching kids how to get great at baseball. I wanted to teach people how to invest their money. So I did too. I went back to school to study finance, to become a financial planner. And then the market crashed. That was 2007, 2008. And so I kind of just took a right turn and went down the residential real estate road and figured I could do the same thing, much like you did, where I could teach people when they apply for a mortgage, hey, bigger picture, you could do this multiple times and create wealth because you're going to get a great return off of real estate. And I've had a great 18-year run doing that and teaching people how to do it. So I think when you are in mortgage or you're in real estate and you've got this greater purpose and you understand that the vehicle that we're working with is an investment vehicle, it makes our jobs a little bit more rewarding too.
Totally.
Yeah, we can change people's lives with just a couple different homes.
Yep. So
that's awesome. So let's transition to Kenmore. Why did you pick Kenmore?
Well, because I live in Kenmore.
There we go.
Yeah.
Okay. So you live there. I know there's different restaurants or different amenities in the area. Mm-hmm. When you had the choice to buy anywhere, you and your wife, why'd you choose Kenmore?
So I used to live in Bothell, and my wife is really particular about keeping our kids in the same school district. Okay. And our son changed. He was going into middle school, which really opened up where we could live. And, she just was looking at houses. I didn't really want to buy anything, but she's sending the real estate agent listings. So I figured I don't have a choice. Right.
Yeah.
And so, we're looking at Kenmore was an option, and I didn't really know much of Kenmore other than, going to Kenmore lanes at 18 and gambling at the casino, because they had, they let you gamble there at 18. But anyways, we found a house, and, I had to talk myself into it, but it had an RV pad and had a mother-in-law. So in my mind, the investor mind, I'm thinking, okay, if we had to move, we could maybe keep this house if we rented out the mother-in-law and the RV pad and all that and the house. Anyways, we ended up buying in Kenmore, and over time, I just really fell in love with the community and the city. I think it's a hidden gem, and for a couple of reasons. Should I get into that?
Yeah, oh yeah, absolutely.
Okay. So when I'm working with people now, Kenmore, for those who don't really know exactly where Kenmore is, it's on the northern tip of Lake Washington.
Yep. Yep.
So you have a combination of some really expensive homes that are on the water,
Yep.
in the multi-millions, and you have, some homes. It's a great place for people who it's smack dab right into in between 405 and I-5.
Mm-hmm.
So, I mean, it would be ideal for like a husband who works on the east side and the wife works downtown.
Yep.
It's a perfect smack dab in the middle. You got water views. You got the most bike trail system of any place I've lived. To me, I didn't realize it, but there's so many things that I've fallen in love with Kenmore as far as like, I love to bike. We love to hike. We live right across the street from, I'll get into that because it's one of the hidden gems, but it's when people look for homes, they work on the east side. Usually they say, I want Bothell, Kirkland, or Bellevue or Redmond.
Yep.
But you got to understand, Kenmore is literally sandwiched in between Kirkland, Bothell, and Lake Forest Park.
Yeah.
And actually, I think Briar too, which is another hidden gem. I don't think people really think of as Briar, but so it's literally, I'm literally right on the border of Kirkland, and
Yeah, you can take the back roads there and be downtown Kirkland. That's one of the things I love about that area is, so my wife and I live in, Shoreland, Richmond Beach area. But I work in Totem Lake. I work in Kirkland. I do not like getting on I-5 and 405 in the morning. And so I'll go down through Lake Forest Park, around the lake, through Kenmore, through Juanita, and I'm in Kirkland no matter what time of day in less than 30 minutes.
Yeah.
It's pretty great.
Yeah.
And so I will tell you, the north end of the lake, Kenmore, it's been constantly under revision for the last 10 years. And it's everything from the road systems to the neighborhoods to the restaurants and shops leading into Bothell, which is really great. Or as like I mentioned earlier, you go around over the little bridge and around the lake. So proximity is huge. Kenmore will be one of the main attractions to a city like Kenmore is its proximity to the east side and quite frankly, to the west side too, to Bothell, to, Mill Creek, to Linwood, to Shoreline, to Edmonds. So good stuff, man. Personally, I love Kenmore. So this is going to be fun. Now, nationally right now, we've got the headlines that we see every single day, and it's fairly doomy and gloomy in regards to the housing market nationally. Most listings in a 40-year span, slowest market we've seen in 40 years, right? I always tell my clients, try not to pay too much attention to the national media because it's not necessarily what's happening here in the Puget Sound, the Pacific Northwest. So just so our listeners understand, relative to national headlines, buyer's market, seller's market. What is a buyer's market? What is a seller's market? And I'm going to ask you a follow-up question. What is Kenmore finding itself in right now? Is it congruent with the national headlines or is it maybe a little bit different? But let's talk about what is a buyer's market and what is a seller's market.
Yeah. So, they say that 0 to 3 months of inventory is a seller's market. Okay. And then 4 to 6 months of inventory is a balanced market. If you have more than 6 months of inventory, then you're in a buyer's market. So based off of that, we're not technically in a buyer's market per se. It just feels like that because we haven't had this much inventory in years.
Right.
And so, homes are still selling every day, and the homes that are in the average price points are selling fast.
Right.
And so I think right now in the MLS, there's slightly less than 4 months, right?
Okay.
Right around 4 months of inventory.
Yep.
So that would put you right in a balanced market.
Yeah.
And that's really truly what it is. I mean, I've had many listings that had multiple offers and escalated well above this year, and then I've had some that just sat and So it's a balanced market.
Yeah. So I explain this at home buyer classes. I explain this to pre-approval meetings with clients all the time. Like, this is a healthy market, you guys. This is a very, very healthy market. What makes it feel like you just said a minute ago that it's a buyer's market where you would typically see 6+ months of inventory is the fact that in the last 15 years, We've not seen a market like this, at least last dozen years, right? We've had very little inventory, a lot of movement, and homes sell rather quickly. So kind of piggybacking on buyer's market, seller's market, one of the stats that I like to follow that really helps me better explain to my clients before they get in front of a real estate agent when we're going through the budgeting and the pre-approval process is days on market. So average days on market, that's how long it takes a home when it's first listed to go under contract, days on market. Right now in Kenmore, what are you seeing current days on market, and is it up or down from a year ago?
Sure. So in Kenmore, the average, and I can only speak of the Northwest MLS stats because that's the MLS I'm a part of. But compared to the whole MLS, right now, days on market are 26 days.
Okay.
Now in Kenmore, the days on market are 17.
Okay.
So it is still less than the MLS as a whole.
Right.
So it's still a pretty hot market. Now that compared to last year, though, was 7 days on market.
Okay.
So it is up 10 days.
Which is, guys, anything, if you list your house and it sells within 60 days, that's pretty good. We've never felt that here in the Northwest. We list a house and within a day or a week or so, it's selling. I remember we sold a home, oh my goodness, 18. And I was worried because we went 1 month and it hadn't sold yet. And it was a slower time. I want to say it was October of 18. My agent was like, average days on market's 37 days. And on day 34, it went pending. Yeah. And so, again, paying attention to these numbers, but these are really, really good numbers. These numbers indicate that this market, that this community, Kenmore, is very healthy and it's performing above national and even regional statistics. Okay, good. All right, so we understand a buyer's market, we understand a seller's market, we understand how Kenmore is performing right now. Let's talk about values right now. So what is what's kind of like an average value, home value in Kenmore? And then again, a follow-up question, is that up or down year over year?
Yeah, so Kenmore average has been around $1 million for the past few years. Right now it's about $1.05 million, and that's the average. Yep. That includes homes that sold on the lake. That includes, manufactured home. Mm-hmm. And so taking the averages right now is $1.05 million.
Okay.
That number is up slightly year over year. Last October, it was about $1,011,000.
Okay. Good.
So it's slightly appreciated about a little over 3%.
Right. Which is fair in a market coming out of really, really high interest rates, a market where we've seen inventory increase. I like to say keep it positive, improve for the first time in a long time. So that's really good. It's kind of what I'm seeing. Do you have any data in front of you? I know I'm kind of throwing you on the spot with this one, but average list price to sales price. Yeah, were you able to find any of that?
Yeah, it's right now it's about 99% in Kenmore.
Okay.
Now that's doesn't include what they originally listed it for.
Right.
That is closer to like 98%, meaning, if they drop their price, are they getting that price dropped? They are about 99% of the time.
Cool. Okay. And I tell my clients this too, like everybody wants a deal, right? I always say, talk to your real estate agent about days on market, number one. So if it's on the market longer than a certain period of time, you got a better chance of maybe negotiating a deal. Number two, get very clear on what are the current list price to sell price numbers, because if it's 99%, but you're going to go in 10% low, you got no shot.
Right.
You're going to swing and miss big time. So I love that. All right. So I love the stats. I'm going to kind of button up the statistics part of it real quick with what it would cost, like financially, what it would look like to live in this area. But before I do that, I want to ask you one final question, statistically speaking, about Kenmore. What are your thoughts right now on the overall market in Kenmore? Do you see it? We're at the tail end right now. We're in November of 2025. How are you feeling going into 2026 about Kenmore in regards to the strength and stability of the Kenmore housing market?
Well, I think it's going to pretty much remain similar to what it looks like right now. That's just my opinion. I think that there's, if you have a house that's below the average, it's going to sell. If you're, a little higher in that 2 million price point, then it's going to take a little bit longer. You're going to have some price reductions. But I think, compared to, let's say, Bothell, because I looked into Bothell before I came here, Bothel's days on market is like 50 in the 50s.
Wow. Okay.
So they have about twice as many people in Bothell than Kenmore, and they have double the amount of listings per capita. So they have about 400 active listings right now, and Kenmore has about 100.
That's important too to understand too. If you're looking in Kenmore versus looking in Bothell, the differences in those markets, and you can't compare the two necessarily. So that's really important. All right. Nationally, I know the National Association of Realtors just came out this last week with their 2026 projections. They're projecting across the board. Same thing with Redfin and Zillow. They're projecting across the board in 2026. More inventory, which is good. They're also, with more inventory, they're projecting home values to increase anywhere between 4 to 6% across the board nationally. So that's good. We always typically perform a little bit better than national numbers. And then mortgage rates, they're expected to be down a little, 5.99 to 6.1, kind of right about where they're at right now. And that will definitely help if we see any additional relief there. All right, man. So we know Kenmore. Kenmore is a great community. You're listening to this and you're like, I kind of like this. I can get into a condo for $300,000-$400,000 in Kenmore. I can buy a beautiful home with water view or on the water in Kenmore up to, $4 or $5 million, or you can buy in between. What would it look like? So if I took just the numbers that you shared, kind of like your average sales price in Kenmore being at about $1.05 million, and I reverse engineered the most typical average down payment right now. Well, the National Association of Realtors just said in 2025, the average down payment for a first-time home buyer was 10%. So if we went with, I'm going to use what I always use is kind of 5 to 7%. I'm going to use 7% down. So if I went $1.05 million price point, 7% down. And before I give you this information, I do need to let you know, this is not a quote. These are estimates, but I am a Washington State licensed mortgage loan officer. My MLO ID is 115349. Again, this is not a quote. These are just some ballpark estimates for you to understand what it would look like to live here financially. But $1.05 million, 7% down, you're looking at a total monthly mortgage payment of approximately $7,192 a month. Now, this includes property tax estimates, homeowners insurance estimates, PMI estimates, since you're not putting down 20%. If I reverse engineer from there, you would need to make about $16,000 a month in total household income to qualify for a mortgage, $1.05 million with 7% down. That's about $190,000 a year in total household income. Well, let's say you have 20% down. It gets a little bit easier. Total monthly payment about $6,060 a month. $13,500 total monthly income needed to qualify for that, which is about $160,000 a year. So very affordable in regards to Eastside, Lake Washington living. In my opinion, I think it's a pretty affordable community. Yeah.
Yeah. I mean, for the people who live there, I think it is. Yeah. It is definitely affordable for people in the tech industry or things like that.
Well, and like I said earlier, proximity is going to be the main reason why people live here. Accessibility to the East Side. Incredible local communities from Lake Forest Park to Kenmore to Bothell, all the way up the hill into Edmonds, around the corner in Juanita and Kirkland. So really, really popular area. All right. Now, this is my favorite part of the show. I love learning about these communities, but I also love picking the brains of experts like you. I met you more as a listing agent than working with buyers. Even though you work with both, you're a heck of a listing agent. So if someone were to come to you right now and say, hey, Jason, I'm not ready to list our house for sale. We'll be ready in the next 6 months or so. What's one big piece of advice that you would give them to prep their house in the next 6 months for sale?
Well, I think that number one, first thing that they need to do is figure out what their house is worth now, right? Although it may be totally different in the future, just to kind of prep them of what they could get for now. Because that might not equal more money in the spring, right? However, what I would tell them to prep to the house is really this depends, right? If they have something major that they need to fix, then obviously address that. But most of the time, you're not going to get the money you put into a house if you try to remodel the kitchen and all that stuff. So light work, meaning carpet if needed, paint. That kind of thing, exterior, those are the things that go a long way. without, because your goal is to put as much money in your pocket at the end of the day. So, you know, and it's all about price and trying to get the most for your home by putting in a $50,000 kitchen. You know, you're increasing the price point, and you're also not going to get that back.
Right. Yeah, I think that's really important. Get those estimates for a kitchen remodel.
Sure.
Right. And then go to you and say, hey, if we put 50 to 100K in the kitchen, are we going to get that plus out of the sell? And if the answer is no, like you said, let someone else come in and do that, make the price more attractive.
I want to just mention, sometimes it does make more sense because I've dealt with a lot of, I would call them potential flips this year. And in that case, if it's that bad, then it's like, do you want to be the flipper, put in 150,000 and get top dollar for it? Because if not, we're going to have to sell it to an investor,
right?
Because it won't get financing or
right.
So sometimes it does make sense to go all that route, but usually, typically, people's houses aren't in that type of condition.
Right. And also looking at your competition too.
Totally.
If you got some listings that have brand new kitchens, that's going to be your competition. So you can beat them on price or you can beat them on a remodel. So, all right, let's flip it now to a buyer. You got a buyer that comes to you and says, hey, we're thinking about buying 6 months from now in the summer. What's the best piece of advice you could give them to start prepping to get into the market in 6 months?
I would say, obviously, the answer would be to meet with a mortgage professional just to get them, you know, give them a sense of where they're at and where they could improve. You know, how much money maybe they need to save up more of a down payment. Maybe they got some things on their credit that they need to get cleaned up. But the sooner that they can get that ball rolling, the better.
Cool.
That's the number one thing.
Number one. Okay. What else? Any advice on the market?
Keep an eye on the market. Make sure that, you know, see what you can afford in your price point now and see if it really makes sense to buy now, or maybe you need to hold off until interest rates drop or you save up more of a down payment.
Yeah. One of the things I always tell my clients when they come in to get pre-approved and they let me know that they've got some time, we establish budget right out of the gate based off of what they want to pay for a monthly payment, what they want to pay for a down payment, and then I'll solve pre-approval wise for those numbers and then give them a max pre-approval. But I always tell them this, especially if they got a 4 to 6 month window. Your real estate agent is going to send you homes, listings for sale in your search criteria, in your price point, right? What I want you to do is set up a separate one, whether it be on Redfin or the technology that your agent sends you. And I want you to keep an eye on homes that kind of are in your criteria, that 3-bedroom, 2-bath, for example, in that price point. And when they sell, keep an eye on what they're selling for. Are they selling under list price and the price point that they're selling for? Over a 3 or 4 month window, you're going to get a really good idea of what the market's doing, in addition to how your real estate agent is helping navigate you through that. And you'll feel a lot more comfortable when you go out and you start negotiating, because the market could turn. You could see that 3 months from now, it started to flip, you know, stuff like that. So I always say preparation is so important when it comes to that relative to numbers. So you're more confident in what your real estate agent is saying versus just going, well, we want to pay this or we want to offer that. You'll have a really good idea of that. So this is my favorite question I get to ask you. What's the biggest mistakes that you're seeing sellers make in this market?
Biggest mistake I think sellers are making is overpricing their home. You know, I think that's the number one mistake that you can make, especially in this market. You really have to be the best value,
right?
You know, you have to be just like going and buying a car, right? If you have one car that has all the upgrades and one car that doesn't, and they're the same price, like you have to look at your home,
right?
Just like that. Yeah. So overpricing it is a huge mistake.
So what would you say? I know I'm throwing you on the spot on this one, because I feel like a lot of real estate agents get this, where a seller's like, nope, Jason, I want 1.2 for this house. This house is worth 1.2 all day long. But in the back of your mind and looking at the data, it's 1.1, maybe 1.1.5, right?
Yeah.
How do you have that conversation with sellers, knowing that you're going into November, December, January? If we price it at 1.2, May not be the best strategy.
Well, I can just tell them from my experience and show them the stats that, hey, this is a seasonality thing, and you can see from about July, rate or prices tend to start dropping. And the last thing that you want to do is be chasing the market down,
right?
And be, I just explained to them like days on market after, right. If days on market is 17 days and your house isn't sold, you're obviously overpriced. The longer you sit on the market, the less and less you're just going to be filled in low ball offers. So let's do the right thing. And let's, you want to make sure this home sells, right?
Yeah.
Yeah. So, yes, pricing is super important, and just getting them to paint the picture of chasing the market and just,
Yeah, I love that. Working with an agent that knows the market versus working with an agent that allows you to team up to chase the market. That's not a great strategy. All right, so then buyers, let's flip the switch now. What's the biggest mistake that you see home buyers making in today's market?
Going and seeing homes before they're pre-approved.
Okay. What does that do?
Well, it definitely...
but I'm good, man. I mean, I make 200 grand a year and I got 100 grand in the bank. I'm good. I'm good. I know I'm good.
Yeah. Well, until they pull their credit and their credit, you could make all the money in the world, but if your credit isn't where it needs to be, man, you're, you will potentially have to wait another 6 months or so. And, I've done it. I've shown people houses that I figured that they could get pre-approved, and that exact situation happens where, but not just that. I mean, be out there looking at homes you think you can afford and falling in love with them, only to find out like what you can afford is, it's a letdown, right? Don't let yourself down. Figure out what you actually can afford, so you're not, looking at homes on the Lake Washington.
I tell my clients this: if you follow my process, I won't let you down. If you follow my process, you're going to have an incredible experience, one that over 500 people on social media or online have given 5-star reviews for. When you start to go out on your own and start making up your own rules and trying to do things differently, you open up the door. Personally, I don't care. It's just more work for me, but it's my job and I'll work harder for you. But you open up the door and you start setting unrealistic expectations now. So, for example, I see this all the time. Tech workers, hey, Dan, I make 300 grand a year, but on paper, it's only $125,000 salary. Everything else is RSUs for bonus income, for example. Well, if you don't have a history of that, or there's not a likelihood of that continuing, a lender isn't able to necessarily use that bonus income. So we're only using your base. Your base isn't good enough to qualify for that $1.2 million home. Yep. And now, even though on paper you can afford it, you can't get the funding for it, right? And that's what Jason's trying to say here. So I agree with you 100%. On my end, I don't see it a lot. On my end, I get the real estate agent calling me with urgency going, hey, this client just reached out to me. I showed them a home and now they need the funding. So I agree with you. I know sometimes a home does pop up, right?
Yeah.
But hey, most really good agents like Jason are going to say, hey, I want you to sit down for 30 minutes with my mortgage guy, right? And sit down and work through your budget and work through the different options and work through the market and get prepared. So when the right home does pop up, it's not messy. Mm-hmm. It's not unorganized. We're not running around with our hair on fire.
Well, and it can put them in a hard spot, because if you're in a rush to get a home, you don't know really how quickly you can close. You don't know exactly what their closing costs are going to be. And it really is a relationship between the lender and the real estate agent to really understand exactly what that is. Because you don't want an agent writing up an offer that really they can't, follow through with, because their closing costs are going to be more than they expected, or they can't qualify with, that little amount down.
Right.
So anyways.
A lot happening in the world right now, especially in the mortgage industry and real estate industry. In fact, we just saw some changes the other day where the FHFA is now raising the conforming and high balance loan limits. Now, we live in a high cost area, so King, Snohomish, and Pierce counties The maximum conforming loan limit was right up approximately $1,037,000. It's going up to 1.229 this year. That's good. It keeps you out of that jumbo category. It keeps you in that, conforming conventional loan, which are easier to get through underwriting, can close quickly. Typically, you can get a better interest rate with that. And so, working with pros that understand that know that is so important. The other big thing that means is the FHFA is kind of a governing body over Fannie Mae and Freddie Mac. And by them raising the loan limits that they're willing to insure shows massive confidence in the future housing market this year. So that's really, really great news. I know that's great for people in King County where you work, especially in the Kenmore area, because a lot of those loan limits are above that $1,050,000 sometimes and can keep them out of jumbo land. So this has been really, really great. So if you're listening to this and you're like, man, I really like the Kenmore, maybe the North Lake area. I don't really have a go-to real estate professional or someone that's not a specialist in this area, and they want to connect with you. Is social media, YouTube, your website? What's the best way for someone to reach out to you?
Yeah, you can follow me on Instagram. It's at Mr. Jason Windom, or just you can Google my name and find me. Definitely very Googleable. Yeah. Jason's a pro. I've known Jason. I've seen him in action. I've had a chance to work with him. It's been really great getting to sit down with you for 30 minutes. I thought this was really valuable. I appreciate that. I know you're super smart when it comes to the numbers. I knew you were going to crush it on that. Other than that, you guys reach out to Jason on Instagram. Definitely, I produce this information every single week for you so you can keep up to speed on the markets and what's going on. I'm going to close with this. I think this is one of the best times in my 18-year career to buy real estate. I love the market. I think the market's healthy. I think real estate is healthy. With interest rates where they're at and the optimism around the federal government opening up and the Fed also talking about reducing the Fed rate, which will could indirectly cause mortgage rates to drop as we head into 2026. I think this is just a beautiful time to buy and sell real estate, and there's definitely opportunities there. So if you have any questions or you want to chat with me more about that, I'm always here for you. Appreciate you taking 30 minutes out of your day listening to Jason and I talk about Kenmore, Washington, and we'll see you on the next episode of the Happy Homeowner Podcast this coming week. Bye for now.